My name's Amy Erixon. I lead the Global Investment Management practice for Avison Young here in Toronto. Yeah, great. I'm co-chairing with John Clough from Crombie REIT. And so far, things have been going right along, tickety-boo. The speaker's been great. I especially appreciated Benjamin Tall, who was talking about inflation and his forecast for interest rates, and he reassured us that he's in close contact with the Bank of Canada and that they are dead serious about a safe landing and not crashing the economy in the process of trying to ratchet down the interest rates. He actually forecasted that they'll peak at about 4.25, and then they'll hold it for a year, and they'll tick it up if they have to just continue to wrestle the last bits of inflation out of the market, but that he's not expecting them to keep ratcheting at the rate they've been going. So that, I think, was received by the audience as super good news. The bulk of the sessions yesterday were around return for office, the 15-minute neighborhood, some of the changes that COVID precipitated or accelerated, depending on your point of view. And I think that there's the nuggets in that were related to experiential opportunities, and there's sort of a comment that offices are going to have to earn the footfall, and same with stores, and a lot of discussions about how you can actually reinvent how you're going about delivering your product. I think were some strong takeaways for the participants. I think we're still in a price discovery period. I know that from the investors that I spoke with in the audience, that the opportunistic ones are eagerly awaiting repricing of the marketplace, which is not really happening as fast as we had hoped. And a lot of the more conservative investors are sitting pat. Blake Hutchison said that's actually the instructions he's giving his team. We're long-term players, just sit tight for now until we have better clarity on where the market is heading. I'm pretty optimistic about Canada's relative positioning from a G7 standpoint. I think that we have a lot of industries that are doing better than a lot of other parts of the world, particularly agriculture, oil and gas. We have a lot of solutions to the supply chain difficulties that the world is experiencing. I think that overall the world is going to be pulled down. They've leveraged the booming Chinese economy for the last 2 decades, and that engine of growth isn't going to be there. But I think North America is generally going to fare better than most other major global markets, and Canada in particular better than the United States, because there's a lower reliance in the real estate market on debt, and there's less of a trading mentality. And so I think that it should be relatively smooth. If we have a recession, and I actually think there's some chance we won't, it should be short-lived and shallow. And I'm pretty optimistic about the US situation too. I think it's uneven, much more uneven in the United States, because you've got markets that are winners and losers. But I do think that in general, North America is going to be the place to be in 23 and 24 on the real estate side.